fundsupermart.com.
What is your outlook on Asia equities for 2012?
The Asian markets have not done that well in the last 2-3 years outside of ASEAN, especially in Singapore and Hong Kong, China. That is a reflection of the global markets in particular. Right? The global markets, as you're aware, has been affected by the situation in Europe and a very soft economy in the US. And to a certain extent, also the Asian markets is also affected by the continued tightening policies imposed in China. Right? So these three factors has been killing the market, so to speak, the more global markets. And these three factors have pretty much reversed in the last 3 months. That's why we have seen a very strong rally in the markets, one of the strongest ever in the last 20 years, in fact. So this turnaround, we believe, is proper, is genuine, and if it continues, it will continue to drive the markets to much higher levels for the rest of the year. That's why we think there should be at least another 10 to 15% return for the rest of the year for the key Asian markets, on top of what we have already achieved this year, which is about 10+% return. So in short, we think Asian equities, Asian markets will do well this year, driven by a lot of money and driven by proper turnaround in economics.
What are some of the key performance drivers of Asia equities?
Asia as a whole is very diverse, but one of the biggest Asian driver would probably be the stabilization of China. As you know, China has been trying to slow down for the last 2-3 years. If they can achieve a soft landing, as what people are expecting, then it offers quite a lot of upside in this year onwards. The other key drivers is specific to the countries. If the reform in Indonesia and the Philippines continues, then the investment cycle will continue and they'll continue to do well. The other key driver is obviously in Malaysia. If there's a smooth election, then there will be more confidence in the stock market for people to invest. Yeah.
What are the key risks of Asia equities?
The Asian markets has been very well correlated to the rest of the world. So the thing that brought it down last year has been European situation and the softness in the US economy. And so those two factors are still in play. So if they do not resolve themselves, then it could continue to be a key risk. The other new risk that we are looking at is the Iran situation. If the Israel are to make any strategic aggressive move against Iran, then oil price will spike up and then it will affect the rest of the world.
Which countries or sectors demonstrate your strongest conviction for 2012 and why?
We think the country with the best possible upside is actually in Hong Kong, China. It offers the most value. The markets there has been doing badly for the last 2-3 years. And if the government in China does do a monetary easing, the credit cycle will come back and that will mean it will be very good for stocks in general. So we expect that to happen sometime in 2Q or 3Q this year. And once the signal is strong enough that the government is easing, we should see a decent rally in Chinese equities.
Conversely, which countries or sectors do you have the least conviction for 2012 and why? I
think in a bullish environment, it's quite clear that Malaysia has the least upside. I think investors are very fearful of the election. The outcome is not so certain. The uncertainty is creating people to hold back from investing, especially since that the market has held up very well and is not cheap anymore. It's one of the more expensive markets in Asia Pacific.
What is your advice for investors looking to invest or are currently invested in the Asia equities?
The Asian markets have done very well this year. I think if you invested offshore, if you invested in Asia, you're probably up 10+% year to date. The first temptation is to take profit, is to sell. We think there's a mistake because currently we are in a very good environment for stocks because there's genuine economic recovery overseas in the developed markets, and at the same time the money is very, very cheap. So these two combinations should make it a very decent year for stocks in general. So it's still too early to sell, and we think investors should hold on into equities if they have it. If they don't have it, they should be buying into it.